The route guidance will start now. In a quarter of a mile, left turn at the end of the road onto Cedar Swamp Road. Turn at the end of the road. In 4/10 of a mile, right turn onto Wheatley Road.
Register at BloombergLive.com/prognosis/radio. That's BloombergLive.com/prognosis/radio.
Dave Gockel is CEO of Langen, an international engineering and environmental consulting firm. He's also a strong advocate for funding research partnerships between universities and industry. Dave is a graduate and board member of NJIT, New Jersey Institute of Technology.
How do we evolve as a society? We solve problems. And who are those problem solvers? They're the engineers and the scientists. So the demand for STEM education as we go forward is just tremendous. I think that NJIT has always done a wonderful job of bringing leaders in the industry to fund research that goes on and staying connected with the real world and making sure that the students get that exposure. NJIT has really expanded its programs to cover a much broader landscape while still delivering quality.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Hayden & Regal is one of the largest independently owned global investment management firms with more than $118 billion in assets under management. We offer an array of tailored investment strategies, including equity, fixed income, and balanced portfolios, as well as domestic and offshore mutual funds. Independent since 1983, Hayden & Regal is committed to providing customized investment management solutions focused on achieving our clients' financial objectives. Learn more at Payden.com.
Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 1130. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's World Headquarters, I'm Charlie Pelota. Broad-based advance, the Dow, the S&P, NASDAQ 100 index, all pushing higher as investors recalibrate their expectations in response to the Federal Reserve, indicating that members will continue to raise rates, but are open to slowing their tempo. A batch of upbeat earnings also lifting sentiment. Case in point, Abercrombie & Fitch surging now by 19.5%. Also today, Best Buy up 11.8%, American Eagle Outfitters up by 17.8%, Analog Devices up now by 5.4%. So the Dow, the S&P, NASDAQ are all pushing higher. We've got the S&P close to session highs right now. 10-year yield 3.75%. The 2-year yielding 4.51%. Spot gold up 0.1%, 17.39 the ounce. While West Texas Intermediate crude rallying 2.4%, 81.93 a barrel. Bitcoin very much in focus along with other crypto. Right now we've got Bitcoin up 2.9%, 16,087 back above the 16,000 threshold. So stocks are higher. The OECD, meanwhile, is forecasting global economic growth will slow to 2.2% next year. That is down from 3.1%. Anders Persson is Chief Investment Officer for Global Fixed Income at Nuveen, and he is forecasting a U.S. recession next year.
We are counting on a mild recession next year. We don't think a soft landing, it's not impossible, but I wouldn't call it at least my base case at this point. So there's going to be, almost like the Goldilocks will be some very mild recession that keeps the Fed comfortable that they've done enough, particularly on the inflation side. We sort of need to see the labor market having some cracks.
Wait times for Apple's most expensive smartphones are rising to what analysts say are record levels as the holiday shopping season kicks off, threatening to curb sales at the company's busiest time of the year and derail a rally in the stock. Customers in the U.S. who place an order today would get an iPhone 14 Pro delivered in New York on December 30th after Christmas, according to Apple's website. Apple shares, they're up right now by 0.7%. 102 on Wall Street. Time now for the Market Drivers Report with a focus on American depository receipts. Here she is, Abigail Doolittle.
Thanks, Charlie. Let's start out with an interesting one because despite the fact that we do have oil rallying up 2.2%, Petrobras is plunging. It's down nearly 14%. Its worst day since February of 2021. This is UBS slapped it with a sell on a gloomy outlook having to do with the transition toward President Lula and the uncertainty of what that means. BP, on the other hand, it is rallying with oil up 4.7%. Turning to China technology, we have some mixed action there, but for the most part, we still have declines for China-related ADRs having to do with more COVID lockdowns ever as deaths and cases of COVID are reemerging in that country. Bilibili down 4%, Pinduoduo down 1.8%, Alibaba down 1.25%. Baidu, however, it is up ever so slightly. And then finally, turning to Europe, Charlie, mixed action here. ASML, the chip producer, well, it is up. We have broad-based strength for chip stocks, including ASML, that ADR, and Novartis, the pharma company, that ADR is up 0.8%. It's not exactly clear why. I guess folks want their pharma stocks and ADRs, Charlie.
All right, we thank you very much, Abigail Doolittle, keeping track of those ADRs. Again, recapping, we've got shares of retailers helping lift markets and settlement today with the S&P up now by 29 points, up 0.8%. I'm Charlie Pellis. That is a Bloomberg Business Flash.
This is Balance of Power with David Weston.
Gains in manufacturing jobs in the United States has been larger than in any previous recovery in decades.
Core inflation still well above where the Fed wants it. Where the world of politics meets the world of business.
Clearly, Trump is going to be a personal outlier on Russia and Ukraine.
There's going to be a lot of reading of the tea leaves from afar for what kind of America the rest of the world might be dealing with come 2024.
Balance of Power with David Weston on Bloomberg Radio.
From the Bloomberg 99.1 studios in Washington, D.C., welcome to Hour 2 of Balance of Power. I'm Joe Matthew, in for David Weston today. Several powerful industry groups are urging Congress to step in and prevent a rail strike that could cripple big chunks of the economy just ahead of the holiday season if railway unions do not agree on a labor pact. Jeremy Ferguson represents one of them, the Smart TD Union, telling ABC News what the walk-off could do to the $2 billion a day transport of food, fuel, and, well, everything else in between.
UPS trains, Amazon, there's a number of items that move across this country day in and day out by rail. So that impact would be felt, I would believe, by about every person out there in one form or another.
And we're joined now by someone who's, again, caught in the middle of this storm, Abe Ashkenazi, CEO of the Association for Supply Chain Management. Abe, it's like these stories are never going to go away. The nation's two largest railway unions held conflicting votes. How concerned are you about a shutdown?
Yeah, I think all of us are concerned when you take a look at the volume of products and the types of products that move by rail. We do not have sufficient alternatives to the rail system as we see it today. And so when you take a look at whether you're taking a look at retail or manufacturing or any of the other services, as he indicated, there's very few individuals or companies that are not affected by rail at some point in their supply chain.
I'm starting to think that people are not going to realize this until there is a strike.
It's kind of interesting. I mean, we're already in a stressed system already, you know, from whether labor shortages, trucking and warehouse, we have equipment shortages, the surges that we experience. We're in a very stressed system, so we're losing flexibility and capacity in a system that's already on a very tenuous relationship among the manufacturers and suppliers and the ocean carriers.
Well, with that said, do you support the idea of Congress stepping in, pass a bill that keeps the railroads operating?
I don't see how it doesn't happen. When you take a look at the impact, the estimate of $2 billion a day and the amount of product that moves by rail, we're talking about 30% of our goods and service goods that are moved by rail. And when you take a look at the impact on the international side in terms of import-export, about 40% of the product of rail is international trade. So we're not taking a look at just our current issues, domestically, but you're taking a look at a hit to the entire global supply chain if we're seeing an impact in our rail systems. So it's hard to see how Congress does not step in.
You think the holidays, might light a fire here under everyone to get this done, or maybe is that the point? Are the unions walk as close to holiday shopping as possible to increase pressure?
It's hard to estimate, or to indicate why the pressure is right now. We apparently had an agreement prior in, end of August, September.
Right.
I don't know that necessarily it's focused on the holiday shipping and shopping because most of those products are already on the shelves. Obviously, we had issues with warehousing and trucking, availability, capacity, but most of those products are already on the shelves. So I don't necessarily think it's connected to the holiday, products and services. But when you take a look at, the consistency and the reliability of the rail systems, this is a hit to our entire economy.
I remember toward the end of last summer, beginning of fall, to your point, when this was an issue last, we started seeing shipments affected. Some of the carriers were warning they might not be able to get overnight shipments or quick turn shipments done. As we head for the holidays here, what's the timeline, Abe? You know about this better than most people. At what point does a deal need to be done for packages to arrive on time?
I think you're taking a look at companies that are already making alternative arrangements, but again, these are short-term issues that they can, perhaps see some relief, but in the long term, there is no alternative to the rail systems that we have. Companies may be making, alternative arrangements for hazardous materials or products that are critical to their manufacturing, maybe stocking up a little bit more, but short-term, solutions for a long-term systemic rail strike, there is no alternative that we see in the marketplace right now. One train line approximately, it translates to 300 trucks. We don't have those 300 trucks. We don't have those 300 drivers. And so there is no easy alternative in the long term for manufacturers or the retail. While they may have some capacity, in the short term, in the long term, there are no alternatives that could replace rail.
That's quite a statistic. 300 trucks for one train. If that is the case, Abe, let's say we do get a labor stoppage here. How long does it take to resume supplying companies? How to rebuild the supply chain?
Yeah, really good question, because you're not just taking a look at products and services, you're taking a look at commuter rail, you're taking a look at a variety of different uses for the rail systems. So the impact is going to be on goods, it's going to be, especially when we take a look at the types of materials and